Wow, it looks like the market has shifted yet again at the end of spring in 2022. Hi folks, and welcome to another episode of Silicon Valley Real Estate Advice with Stephen Smith. Well, here we are at the end of spring in 2022, and the market has shifted again. We have gone from a crazy seller market where the norm was getting way over asking prices, sometimes $200,000-$300,000 over or more, to closer to a neutral market. And there are a number of factors that have contributed to that. So let me work them down for you. Okay, one, are we still in a hot market? You bet your bippy that we are. It is still a very hot market. Just because we're not getting crazy over asking prices does not mean that we're not still in a hot market. Houses are selling. Rather than selling in a couple of days or a week or less, it might be taking another like 2 weeks or 3 weeks. But in a normal market, this is still unusual. Typically, a house is going to stay on the market for about a month on average in most areas. However, in the Silicon Valley and in the San Francisco Bay Area, that is not the case. So yes, it's still a hot market. Okay, number two, are we looking at a bubble? Well, I kind of doubt it. Haven't seen a bubble in quite a few years. I mean, it's still very, very hot. Now, we've had some things change. Interest rates have risen to about 5.5%. Okay, that's taken out probably the lower tier of people that were trying to buy a home. The other thing is the fact that the stock market has fallen pretty substantially, and a lot of those buyers have many of their assets tied up in stocks. So if their portfolio has shrunk, so has their ability to purchase a house. So therefore, there are fewer buyers purchasing houses. Hence, we don't have the same crazy auction market. But make no mistake, there's no signs of a bubble, at least not right now. Three, supply and demand. As we went through last winter and into the beginning of 2022, and this is all due to COVID mainly, we had a very, very low inventory. And as I've mentioned before, it's basic economics, supply and demand. We had low interest rates and we had low inventory. So therefore we had very few sellers and lots of buyers. Well, that's shifted a little bit. The inventory has gone up. We're pulling out of COVID. We have not as many buyers because of portfolio losses or interest rate hikes, but still, it's still a very good market. So what exactly does this mean? Well, we are headed towards what they call a neutral market, which is really great for all parties involved, as opposed to being lopsided one way or the other, meaning that we're getting a bigger amount of inventory and a few less buyers, so things are a little more fair. But make no mistake, folks, the market is still really good, and unless we have some kind of crazy unpredicted event, it's probably going to stay good for a little while, at least through the end of the spring and probably into the summer. Well, that wraps it up for another episode of Silicon Valley Real Estate with Stephen Smith. If you like what you hear, please subscribe or hit the like button, or share with your friends, or leave a comment. And if you're interested in buying or selling in the Silicon Valley area, or even the San Francisco Bay Area, please reach out to me. My contact information is below, as well at the end of this video. So until then, we will talk to you later. Thanks for watching.